Happy New Year, ladies and gentlemen. Welcome the year of the ox. The year of the ox generally is good for stock markets. But if you're a Singaporean or you're a PR and you have only invested on the SGX, can I say the same thing for you, ladies and gentlemen? Difficult, right? Because I just want to tell you in this particular video and show to you, ladies and gentlemen, that if you had just invested purely on the SGX, you would not be able or be in a position to make great money, right? So today's topic, we are going to delve into why do Singaporeans perform poorly investing in the stock markets, right? I know it's not very good news, but unfortunately, ladies and gentlemen, usually the truth hurts. And the truth is that if you had only just been investing in the SGX over the last decade, you would have done poorly. Now, and another interesting article, why do many Singaporeans perform poorly investing in the stock market? You know, there are a few reasons to do it. That is actually before you invest in any particular index, markets, um, bonds, you have to understand the nature of that. And so in this case for the STI, that's the Steady Stock Component Index, the bulk of the components in there are actually old economy stocks. The STI is not the kind of index that will actually allow the investors to ride on the digitalization age, the upcoming 5G era, as well as the booming e-commerce or exploding esports sector. So these are the sectors that we have prepared our students at GCP Global to exploit and ride on this group, and they've done very well. All right. Um, so the reality has come home, ladies and gentlemen, and I know reality hurts. And that is last year, Singapore have overtaken Thailand to become Asia's worst stock market. You know, will it continue be the worst stock market in this region for this year? The verdict is still out. All right. Now, it may come as a surprise that out of the 30 component STI index, you have 6 REITs in there. Now, the REITs have done very well. So again, if those REITs did not perform well and are not in the index, then really, has the STI performed even worse? I think the answer is quite apparent. Now let's take a look at this chart for the last 10 years, right? From the end of 2010 right up to September of last year. We notice that for the STI index as represented by the white line, the performance as I've shown in my September class for my students, is just a straight line down from it ended 31st of December 2010 at 3190, and in September last year it's at almost 2468. As of just a couple of days before the market closed for the Lunar New Year, it's at 2009. The reality, therefore, ladies and gentlemen, is that STI has not performed in the last 10 years. In fact, they have only come down. Now, this is despite having 6 REITs in the index. Can you just imagine if there were no REITs in the index, then the STI will perform even worse. Will the fortune change for the next 5 years or this particular year? Difficult. I doubt so. Okay, but as what we have taught in our GCP Global investment classes every quarterly, if you had diversified your portfolio and invested in, say, the Hong Kong market is represented by the blue line, which has outperformed STI, or even the XLK, which is the technology ETF in the US, you notice that over the last 10 years, they have shot up 310%. Yes, 3 times, ladies and gentlemen, meaning that you put in $1 million here, you are getting or sitting on 3.1 million in value currently, and that's not including all the dividends. So The reality, ladies and gentlemen, therefore, is the fact that the Singapore market is not a place to be in. The SGX has seen shrunken companies listed on the bourse. The market cap has basically flattened out, right? So uh, the recent REITs listings, for example, like the likes of ARA Hospitality Trust, um, Prime REIT, have they done well in terms of basically listing on the SGX and lifted SGX market cap? That's doubtful, right? So as investors, ladies and gentlemen, we have to recognize and honestly ask ourselves whether in order for us to multiply our wealth, which are the markets to be in, which are the trends that you need to identify, to be able to secure the multiplier effect on your wealth when you invest in those stocks. Okay, so essentially this is what we teach in our class. All right, so our next class is coming 27th of February. Okay, the course outline is exactly the outline that we have shared here. Where and how to make your next $1 million in the year of the ox. You notice that year after year for the last 32 years now, we have been sharing our best ideas with you so that you can safely multiply our wealth, give bigger ampouts to your loved ones, and have a more easier, less stressful, contented life. That's what we at GCP Global does. So Happy New Year! As what we mentioned in our bestseller book, How to Make Millions in REITs, in our coming class on 27th of February, as well as our investment classes at the beginning of each year, we always teach you how to multiply your wealth in, say, technology stock, disruptors, innovators, and enablers. Do sign up for our class in our GCP Global website. Just go to the GCP Global website and you will see essentially the cost details as well as the payment details. So once again, Kung PC Fire Choi, do get my book in a newsstand and enjoy your new year ahead. Cheers, everyone.